All right, what's up, guys? This is Ruben from TG. And in today's video, I want to talk about how, as an investor, you can better buy the dips instead of just buying on every single red day. Actually, funny enough, I had a call with somebody just recently about how they are typically long-term investors as well too, and they just buy the dip on stocks that they like just because they see a 2% down day. And the truth of the matter is that for most individuals, if you don't have the capital, your capital can dry up real quick. And so that's a problem, right? And so you want to figure out like, well, what's a better way? Like, how do you know what a bottom is, right? And that's what I'm here to kind of shed some light into. All right, so here's the article, right? It says when to buy the dip, a smarter strategy for long-term investors. Buy the dip, they say, but what happens when you do? And it just keeps dipping. See, that's always a problem. You're just not frustrated, you're stuck. Your capital gets trapped, your confidence tanks, and now you're back holding a position that looked like a deal but turned out to be a disaster. I remember when I was first trading, well, at least first starting out with, as an investor, I was buying Skills, SKLZ. Actually, what's that stock at now? Let's find out. Skills. This stock in the hype of the pandemic was a really, really good stock. I think it was like, what was it at? I don't remember ever being $900. It was probably something less. But anyways, this thing tanked so much. It became a penny stock at this point, right? And I kept buying the dip. I didn't know. If I would have known if I would have known that there was no dip buying for this, I would have never bought this stock. Okay, let's take a look at some other stocks that I like. MDB. MDB has been falling ever since like its all-time highs in COVID times. It was at 500 and then 360. Thing is, like, when do you know where the bottom is, right? Like a company like MDB, it's a pretty solid company, right? But how do you know this is a bottom? How do you catch bottoms and then sell them a little bit higher, right? That's always, I think, the best thing to do. And so in this case, if you would have caught the bottom of 230 and you would have known, hey, like it's about to dry up here around 290, you could have probably sold a bunch of position there, right? Or or you could have just like, yeah, maybe at that point it's just trading at that point. But anyways, the core problem here is buying too early. Okay, most retail investors treat every red candle like a Black Friday sale, but the market don't move in sales; they move in cycles. Okay, so this is really important. Every stock moves in quarterly cycles. That's really important. So it's always based on the earnings, right? Earnings come up, they go by. Okay, when's the next earnings? So when you buy the dip in the middle of a large quarterly drawdown, you're not catching a bottom, you're catching a falling knife. Or even worse, this buy the dip mentality can dry up your capital fast if you keep averaging down without a real system. So that's what I was talking about. Just drying up capital, right? Like you're using it all up because you think it's a sell, it's a sell. It's not always a sell. There could always be more downside. Okay, so you gotta figure out like you got to know where is a local bottom, right? And it's going to be based off not just off of the option premiums, but I'll show you a tool that we use, but also other fundamentals too. Like is the stock going to grow or not? If I would have known that Skills was not going to grow, then I wouldn't have bought the dip anyways. But anyways, that was in the past. So stocks move in quarterly cycles. Institutions don't operate on daily memes. They move capital based on quarterly earning cycles. Here's what I mean. Every quarter tends to have major top and bottoms. Okay, most earnings surprises are already priced in, and price usually reacts to positioning. I want to show you an example here actually on Palantir. Palantir had today's May 6th, so whenever you're watching this, Palantir had earnings yesterday after closing hours, and I believe that they did well. Okay, they did well. They met expectations, and their guidance I think stayed relatively strong, but it tanked. It's down 13% on the day today, and the reason for that is because more than likely, and I'm not keeping track of this stock, but more than likely it's because it already met the quarterly top. It's already overpriced in. Okay. So if you know how to figure out the quarterly top for a ticker and the quarterly bottom, you'll be able to know whether something's priced in or if something's undervalued. And if it's undervalued, then that's when you buy the dip. That's also in line that the fundamentals are going to stay strong as the company continues throughout the years, right? If we take a look at like their more info here, like the earnings. Let's take a look at annual, right? They have if we take a look at Palantir, their EPS growth is going to go up every year, right? It's forecasted 2 years in advance, right? Well, 3 years in this case, because 2025, 2026, and then 2027. It's going to grow. It's a good company, right? But the thing is, it already priced in. It already did its move for the quarter, and so that's why it fell. But then now the next question is like, well, where's the dip? How do I buy the dip on Palantir for such a strong stock? And I will show you that here in a minute. Okay, examples. You've probably seen stocks beat earnings like like Palantir, but tanks anyways. That was the top of the cycle. It was priced in weeks ago, right? If the stock misses earnings, but it rips, it's more than likely because it was already priced in at the lows, right? It's too undervalued. So it's not about the news, it's about where the quarterly moves are. And so this is really, really important, right? It's about figuring out the expected move. Okay, so when should you buy the dip? So I'm going to show you a DIY version, right? This DIY version, you can do it yourself. It's a really easy formula. And then I'll show you the Dextron version because it's a little bit more advanced. It takes into consideration other option premiums that you may not want to do the math too. Okay, so this DIY version is called At the Money Straddle. Expect to move. That's a method here, but it's expect to move. At the money straddle, expect to move. After earnings gauge, expect to move. After the earnings, to gauge the expected movement and find your timing window, here's how. This is how you do it now, right? So in this case, Palantir already did its move. So now we want to figure out, okay, the next earnings is on August 11th from today, right? So I want to know what's the expected bottom and the expected top for Palantir. And so the way you do that is that you pick the stock you're watching, you select the option expiration date nearest to the earnings report. Right now, probably there's no option chain for this given ticker. So not anywhere close. So August 11th. Let's see if we can find it here. We have August 15th. Okay, so this is the week of August. Okay, this is awesome. This works out. So August 15th, right? Now I want to figure this is the middle of the option chain. Now I want to figure out the expected move, right? So what's the next thing? What's the next bullet? Look at the money call plus put price for the nearest expiry before earnings or after earnings is what I meant. Like the week of earnings, you want to get these numbers, and then you add them together, and that's the expected move. So in this case, we have August 15th expiration already. You just get the ask price of the call, so that's going to be 1720 plus the at the money put, which is 1685. That's the price, and you add them together, and then that's the expected move for Palantir from here until the next earnings. And you just mark them on your chart, and then that's it. Like if it hits the bottom, and you know it's going to do well in the future, that's a bottom that you may want to buy and add more to your long-term position as a long-term investor. Okay. I'm going to show you another example of actually Celsius. They hit the quarterly top. I have these lines here called QEM, quarterly expected move. And it's already hit the top, but now they just released earnings. They did bad, but they're still standing pretty strong. So now what I need to figure out is like, okay, where's the next expected quarterly move for Celsius, right? So that's it. That's how you do it. You just go to the option chain, go to the closest expiration, maybe a little bit before or a little bit after whatever the week of earnings is for that ticker. You look at the money call put and price, get the ask price, add them together, add it with the current price of the stock, and that's the top and that's the bottom for you. Okay, so pretty easy. This is a simple DIY version. So if you are like a long-term investor and you want to buy the dip, All you have to do is just once you mark those levels, you say, okay, we met the bottom. I want to start buying a little bit more for my long-term investment. That's it. Pretty easy. Okay, so I say here, but wait 2-3 days after earnings because implied volatility is still digesting, the market's still digesting the news and what's going on. So I would just wait a little bit. That way you don't have to get you don't get skewed data from implied volatility. Okay, then you can buy the dips near or below the lower end of the expected move. It's just that simple, right? Look for confirmation via reversal candles or volume surges. So we like to use the daily time frame for if you're a long-term investor, right? Look at the volume. See, like, is volume picking up around these levels? And if so, uh, maybe that's a good sign too, right? It's adding extra confirmation. Set stop loss just below if it failed to reclaim. So that's the suggestion that we give. It's simple, but it's manual, right? Because if you're an active investor, you just have to be active about this, and it's not something that you can really automate. You got to figure this out. If you want something faster, the smarter way is let Gextron do it. Okay, so this is pretty much just talking about how Gextron does it. Other things that it takes into consideration, like implied volatility shifts, theta decay, so really important, right? As time gets closer to expiration, that theta is going to make the expected move smaller and smaller and smaller. So it's important to take that into consideration. Other levels. Okay, let me show you. Let me show you NVIDIA because I think we could look at NVIDIA here. Okay, so I have Gextron here, and we'll pull up the NVIDIA chart as well too. Okay, I'm going to this is a lot to look at, so I'm just gonna remove these drawings here. We're gonna start from scratch, and the only thing I want to do here is to show you how to do the expected move with Gextron, right? So in Gextron, it's gonna give you some other key levels, daily levels, but there's a little calendar here icon, and we click on that, and it shows you all the expirations, right? It's all grouped within months, and within months you'll be able to find the expiration. The first thing I want to do is when is NVIDIA's earning date? So it's going to be May 28th. Okay, so we go to the May month, and we look for the week of May 28th. So that's May 30th, 24 days from now, right? So this says that it has about a $12.65 move from the current price that this was taken at. So let's get the calculator out, and we'll add that. Okay, so it's really simple, right? In Gextron, I just say 113.64 plus 12.65, and that gives me 126. Can we copy that? 126.29. That's the total high. So I just go to my charting tool of choice, and I add a line here, and I say this is gonna be 126.25, and I'm gonna label this as QEM. That's for me. I know it's not the quarter. I know the quarter is almost over, but that's just for my own mental. I know that QEM stands for like earnings date. So that's that 126.29. So that from here until there, that's what we can expect from as of right now, right? Now we want to figure out the bottom. So we just go here. We say minus. We go back here. We say minus instead. We say 12.65. And that's what we get, 199. And so I'm just going to draw another line here. And say that's the quarterly bottom as of right now. And I like to label these as a QEM, and I also like to do a parentheses in here with the plus minus sign, 1265. So I know how I came to this conclusion, right? How I came to this conclusion. So that's it. So in case of NVIDIA, like if I want to add more, if NVIDIA hits 100, this could be a good buying zone. Okay, that's it. If price goes all the way here, you may not want to be buying here. You may actually want to start hedging your position in case you want to start buying some insurance in case it starts to drop down, right? Just like I said, everything is about quarterly cycles here, okay? It's not about, yes, EPS growth, PE ratios, it's all that stuff is important, but stocks move in cycles all the time. They have an expected top, an expected bottom for the quarter, and it's your job as a long-term investor to buy the bottom and then sell at the top, right? Whether it's 2-3 years from now or whatever the case is. All right, and so that is it. That is how you buy the dip as a long-term investor. Okay, if you have any questions or if you want to try out Gextron, I'm gonna put a couple links in the description box, and it's a 7-day free trial. It's super simple, risk-free, and let me know. And if you have any questions, I'll just put them in the comments. All right, peace out.